Hello and welcome to the Miko Bits show, and I'm your host, Miko Bits. Today, I have an exciting show prepared for you. We have Zaki from Sommelier Finance. And for those of you who don't know, Zaki is a bit of an OG in the blockchain space. So it is a very special episode. I'm quite excited, and we're really going to, I think, learn a lot. Without further ado, here's Zaki. Welcome to the Miko Bits show.
I'm happy to be here.
Yeah, wonderful. So I guess the first question is, what problem is solved by Sommelier Finance?
The problem that Sommelier Finance is out there to solve is the problem of making sort of retail participation in automated market makers accessible, understandable, profitable, for the masses. That is the goal. I've been, very excited and an admirer of all of the things that have been happening in the decentralized exchange space. I think there's a tremendous amount of innovation there. But one of the gaps that I've sort of observed is that, there's a lot of focus on the trader experience. There's not as much focused on the liquidity provider experience. And Sommelier sort of was created as, taking all the technologies that I've been working on for all these many years and sort of starting to bring them together to improve the liquidity provider experience as much as possible.
Yes. So we are definitely going to go into your past experiences in blockchain. So that's a very kind of a dangled bait for me, but I'm going to resist my temptation. And so what I would love to do is sort of have you unpack a little bit about this experience optimization, right? Because at the moment, if you're a liquidity provider, you pretty much sort of look at a bunch of pairs, and oftentimes you're using some kind of abstracted interface like a zapper or you're using something that will just allow you to sort of ape your liquidity, right? But so I guess, how would you perceive of an improvement to that, right? Because, obviously you're talking about something where there's a material change to, having that be a much better experience.
I mean, so just a little bit of the story of Sommelier. There are a couple of things that sort of are the motivation of Sommelier. One was, I've long sort of viewed the Cosmos technology and the Cosmos technology stack as complementary to Ethereum and complementary to the Ethereum ecosystem, and not necessarily as as the Ethereum killer narrative. And I think you always see this play out because the work of Cosmos and the work that I've been doing all these years has been open source from the get-go. So you see this technology show up everywhere. Right now very much in the limelight is Matic, and Polygon, which are users of the Cosmos SDK and users of Tendermint and users of all this open source stuff that we have been producing for all of these years. And it's clearly it's found a niche in helping the Ethereum experience. But so I really wanted to, with the completion of sort of the Cosmos white paper, I wanted to sort of, take the opportunity to focus a little bit more on what was going on in Ethereum, what was going on in Ethereum DeFi, and all of these things that really excited me and intrigued me that I've been waiting for all these years. While we've been building all of this infrastructure. So that was a big thing. Sommelier was really a decision to sort of, take this next phase and really focus on Ethereum and the needs of the Ethereum DeFi community. While multi-chain DeFi is inevitable, see what we could do with the Cosmos stack. But it was, the big thing that happened with Sommelier is as we were working on it and we were focused on sort of the Uniswap v2 design space, Uniswap v3 happened. And we decided to sort of reorient all of our energies towards Uniswap v3 because I think Uniswap v3 is an incredibly, when I saw the Uniswap v3 like announcement paper, all of it, immediately understood what they were trying to do, and immediately understood that there would be this entire software ecosystem that would have to be built up around Uniswap v3 if the Uniswap v3 design is going to sort of realize its potential. And so, this is a very exciting community to be part of. It's really exciting work to do. It's very challenging. It's very exciting. And so, dived right in. And so obviously, so the initial product that Sommelier launched a week after Uniswap v3 launched is pairings, which is basically sort of, buries the range selection phenomenon of Uniswap v3 in automated technical analysis to help suggest ranges for users. And we've been seeing about $1 million of liquidity per week flow through that app into different Uniswap pairs. And I think we definitely are like, there's huge opportunity to improve the Uniswap v3 user experience just at that simple layer of like, how do you figure out where to pick your ranges? So that was the initial product that we sort of came out with. Now, like a number of other projects that many of which have been on the Sommelier sort of AMAs and podcasts that we've been doing is everyone is working on sort of automated rebalancing, automated liquidity management, automated liquidity deployment. Because the tricky thing about a Uniswap v3 is not just picking your range, but the spot prices move. Where should your liquidity be tomorrow? Where should your liquidity be the day after? And then you have the gas cost of moving your liquidity. And all these pieces come together to create this very complex, the world of AMMs is already complicated before we sort of started to explore concentrated liquidity. It does, and there were sort of initial stabs at concentrated liquidity, like things like integral finance, stuff like that, who were experimenting with concentrated liquidity before the Uniswap v3 came out. But as you see with Uniswap v3 and per v2, like we are well into the concentrated liquidity world, and now is the time to start trying to make that accessible. And so we're really just like that. This is where our bread and butter is right now. Is just sort of helping users deploy their assets as liquidity and automated market makers, and sort of focused on concentrated liquidity as the problem domain, because there's so much work to be done.
That's amazing. I mean, I think that you're absolutely right. The thing that's extremely complex, right, is that Uniswap v3 starts to take some of the themes that relate to sort of de-automation of market making, right? So it starts to get into much more sophisticated market making behavior by LPs, right? So I think that having this layer, it seems like something that is almost like a missing ingredient, right? And I think obviously this is flying under the banner of capital efficiency, right? But obviously capital efficiency doesn't necessarily come for free. So I think that's a very interesting set of observations, and
I think
yeah. Please go ahead.
Just to like jump in right there.
Yes.
It's like what I think. So what I think is going to end up being what is so magical about Uniswap v3 is it's going to be an order book that you can have liquidity mining on. Right?
Yeah. Yes. That to me, your use of the word order book is a wonderful. It's wonderful, and I think it's not terribly well understood. So maybe you can help unpack that a bit for the audience.
Like a traditional order book, you can't have liquidity mining, right?
Yes.
You can't have liquidity incentives. To me, like I remember, like my history with this is, I remember, like right when the Bancor, sale happened and Bancor launched, I remember sitting with Jay and Ethan, and Jay and Ethan, I didn't really get it at the time. And Jay and Ethan being really excited about what Bancor was doing with the automated market maker. They saw that there were a lot of flaws in the Bancor implementation, but there's really something here. We were all very excited about what Hayden was doing with Uniswap long before Uniswap launched. But then when Synthetics started liquidity mining for Uniswap, that was like, to me, like, okay, like I really see now where all of this is going. This ability of tokens to sort of bootstrap their own marketplace and bootstrap the liquidity sort of in this like sort of self-fulfilling prophecy kind of way, is just is a superpower of decentralized coordination. And now you see Uniswap V3 has launched. Omar has sort of code frozen the Uniswap V3 staking contract, which I think is going to be a next big part of like sort of the Uniswap V3 picture. You are starting to see people like Harvest provide some liquidity mining incentives on top of Uniswap V3 as well. There is just like we are at the earliest stages of what I think is really going to be a revolution. And maybe one of the things that I think is least appreciated about capital efficiency is when you combine capital efficiency with liquidity mining, it's a very amplifying phenomenon because you just have to provide fewer incentives to get the same amount of liquidity or price impact in a marketplace than you would in the old world of the pre-concentrated liquidity world.
So how does sort of value capture happen in the Sommelier protocol? Like how does that function?
So our mechanism is basically, the big question right now is, we've talked about all of these like fascinating moving pieces that are floating around the evolution of the AMM space. But the missing piece is, in Ethereum users are going to need people to sort of act on their behalf via smart contracts. Some of this computation has to be moved off chain. Some of this computation has to be moved. You need actions that can be triggered programmatically because of events that occur on chain and off chain. There is this sort of infrastructure. And if we want to avoid all of this complexity just getting embedded in various institutional players, we have to decentralize it. And the approach of Sommelier is to take the concept of a validator set that we've sort of pioneered in Cosmos, and take this computation that needs to be done, these computations that sort of make DeFi accessible, where liquidity should be reallocated, what pool you should be in, how you are mining and other incentives are being optimized, and put those computations in a validator set selected by the network to then go out and earn fees on these assets that that users bring to the network. And there is basically like the vision is for there to be a fee rake on the validators to get paid out of the profits that they are generating for the users.
Yeah, that makes good sense. So this is a bit of a sidebar, but I just wanted to confirm for the audience a little bit more about the implementation. So, obviously you've mentioned a number of times the Cosmos SDK and the sort of superpowers that it provides, but I just wanted to kind of get a better understanding of the technology stack for Sommelier and like, is this a Cosmos project, or like tell us a little bit about how you've implemented this.
So there has been this project that has been going on in Cosmos for several years now, which is it has gone by many names: the Bridge, Peggy. Now it goes by the name of the Gravity Bridge. But it is a technology for interoperating between the Cosmos SDK and Ethereum. Um, and you know, this technology has been maturing for quite some time. But and in the meantime, many bridges have launched. But I think that Gravity Bridge is somewhat unique in its capabilities, its flexibility, its level of decentralization. It is a unique niche in the bridge space, but I really want to use Sommelier to demonstrate that being a bridge is not primarily about like pegged or wrapped tokens. It's really about bridging the computational model, the unique characteristics of different blockchain technologies, and sort of integrating them into a whole. And so our technology stack for Sommelier is some piece of our system is Ethereum smart contracts. Some piece of our, and then there is a piece of our system that is a Cosmos SDK blockchain. And then there's the Gravity Bridge sort of knitting these things together. And so, yeah, I mean, like my day-to-day, right now, I'm sort of in the day-to-day battles of just putting the finishing touches on the Gravity Bridge. And the Gravity Bridge, I expect, will start showing up. It's designed as a general purpose technology for all Cosmos chains. So I think you're going to start seeing it, as it matures, sort of widely deployed across the Cosmos. But Sommelier is focused on sort of the unique application of the bridge technology to being a liquidity.
Yeah, that was a very worthwhile detour. Very excited about it, and to me, it obviously speaks to your sort of deep roots. One of the things that's so interesting, and which we will visit very soon, but I think that the thing that makes me think though is, what are the unique properties that are conferred by this, the Cosmos ecosystem that enable that makes this kind of a uniquely exciting showcase. Obviously, you mentioned that wrapped tokens, and this cross-chain thesis is obviously not the only way to use a bridging technology. So I think this is a particularly insightful and exciting demo, especially it being so close to the heart of Ethereum DeFi, right? So it's a very, very potent and impactful demo of a novel distinct consensus with Tendermint. But I would say that to me, the thing that's kind of sort of the pressing question is this the optimal stack, or are you really just looking to show how proficient you can be as an Ethereum helper? So I'd love to kind of get your opinion about sort of best choice technology and how you see Cosmos functioning as an Ethereum booster. You already mentioned, of course, Polygon Matic, but I really kind of want to zoom in here and talk about sort of the stack.
Yeah, absolutely. Okay, so I mean, when you ask the question about optimality, um, I think I wrestle with that quite a bit. But like one of the things that has been most fascinating for me at this point has been, when Tendermint was like a first of its kind technology, right? It was the first BFT proof of stake oriented, like classical consensus deployed as a blockchain, deployed at scale, deployed with sort of just like ad hoc groups of strangers on the internet running validator sets together. It was very much a first of its kind technology. And especially given the amount of money you can raise to build alt Tendermints or new consensus engines, it's been no surprise to me that there have been dozens of new consensus engines that have come into existence, in the mode of Tendermint or exploring some other piece of the
For sure.
design space. Well, actually, one of the things that I think has been most fascinating to me is to see how much, like, one of the things that, other things I do in the space is, I run a validator with Occlusion. Because, it was like eat our own dog food when we were bringing up the validator experience and learn what it is to run a validator. And honestly, like, I have yet to encounter a node technology as mature as Tendermint, just as an overall system.
Sure.
Like, there are more advanced consensus systems than Tendermint out there, but there are not as many there are not any other consensus systems that I've been able to find that are as pleasant or understandable or debuggable to run as Tendermint. And I'm sure there someday will be, but there was an obsessive energy behind Tendermint of like wanting to do something and be the first to do it, and to demonstrate that it could be done when many people told us it could not be done. And I don't think that, in the sort of post after the Cosmos mainnet, I don't think that anyone else has that level of obsession. And so it's taking a little bit longer than I expected for other node technology. So I periodically go out and look. I periodically go out and ask the question, is there some other stack that I would rather be building with, which would add so much value that would overcome my sort of sunk cost bias and familiarity with Tendermint and the Cosmos SDK. And so far I haven't found it, but I will always be looking. So that's one aspect of it. So I think Tendermint is still right now the state of the art for building something like this. And I think the best demonstration and proof point that I'm not just like blowing smoking my own supply here is the success of Thorchain, right? I think probably the thing that is most similar in the ecosystem to what Sommelier is trying to do is Thorchain. And Thorchain is a Cosmos SDK powered chain. What they are doing is like mind-bogglingly complicated. And every day it works, I'm just like, I'm blown away. I am honestly blown away. It is one of the most amazing things out there built on the Cosmos SDK. But everyone should look at it as a reference point for what does the future look like. And I think, Sommelier looks to join that group of chains and that world of like the Cosmos SDK can power something much more than just like another smart contract platform, another sort of self-referential system. And this is what we built the Cosmos SDK to do. It still seems to be the best of breed system for these purposes. But if something else better comes along, I will be very excited to use it.
Well, I think this, which is not to underplay smart contract systems either, right? Because, for example, if you look at, our mutual friends at Agoric, like you could say, well, it's just a smart contracting platform, but, it's actually quite a lot more. So, if you think about it from the perspective of a novel programming model, right, that kind of welcomes, a new level of security and composability. Like, I think in a sense, like that's something that could provide sort of a quantum improvement.
Here is what one of the ways that I think about these systems. So like, I think of Ethereum as an enormous success of like a self-referential system, right? Like Ethereum works because like basically everything that is within Ethereum is like native to Ethereum. People create ERC20 assets. Sometimes they like notionally refer to, USDC's US dollar bank accounts or the coins held in BitGo for WBTC. But a lot of these things are just entirely native to Ethereum, right? And it is a very sort of internally referential system, and everything works by referencing that. And one of the things that I think is the Cosmos stack was really built to do is be a system that like very much is much more referencing other systems. You can see that in the design of IBC, which is really about interconnecting blockchains and interacting with objects that come from other chains. Agoric has this like baked deeply into the smart contracting environment, this idea of holding references to external systems. And Sommelier is really about, like managing liquidity that lives on other chains, rather than just, like we're another place where your liquidity can act. And I think this is very much a very useful power of the Cosmos technology stack that is going to be exploited more and more as the Cosmos develops.
Yeah, I mean, another guest that we have had on the program is Do Kwon, and we think that some of the work that they're doing is also fairly novel. I hope I got that right.
Yeah, that's I think Terra. I also find Terra to be a very exciting system. Um, one of the things we have run. Inclusion has run a Terra Oracle basically since the beginning. We run. I think we are probably one of the only people who are running a different implementation of the like we have run a Terra validator. We have our own implementation of the Terra Oracle. We found it utterly fascinating. Like I just honestly like it hasn't been spectacularly profitable to run a Terra validator for us, but we've just found it so like intellectually interesting to be again exploring another potential and design space. And again, like Terra's consensus, like natively references stable like coin like the price oracle for it's like now it's like a dozen other currencies as just like an integral part of the consensus process. And again, these are like very unique properties that I don't really see coming on into blockchains that are built on other stacks.
I mean, I think it's impossible to really refer to Terra standalone without referring to Mirror and without referring to the capabilities of abstraction that's enabled by sort of an arbitrary synthetic, right? So, the thing that's fascinating about the evolution of it is that Terra really focused initially on providing a Korean won stablecoin and then a USD stablecoin, and then kind of Apple stock, so like basically just moving to anything, and I think that really is kind of a IBC like construct, right? Which is really to be able to have these references to, all kinds of different things.
Yeah, and I mean, I think this is the general sense that the potential of Cosmos SDK is still unrealized. Um, like we are so far from realizing the potential of the Cosmos SDK. Um, and I I had kind of gotten out. I had done some Ethereum development in 2016 and 2017. Um, I audited a lot of crowdfund contracts that ended up with terrifying amounts of money in them. 2017. But and it's been interesting returning to Ethereum development. It's been interesting coming back to Ethereum development. I think I've spent most of the last day fighting the Ethereum ABI encoder. But they're very different worlds. Ethereum development, Cosmos development. You can build very different things with them. Sometimes you can build things that both feel similar, like Cosm, which is running on Terra and many other blockchains that are coming, is what Mirror is implemented in, provides an Ethereum-like programming experience on top of the Cosmos stack. Agoric is also coming, which will it can do many things, more things, but it can also provide an Ethereum-like programming environment in the Cosmos ecosystem. And so, yeah, I mean, it's actually like, I mean, to a certain extent, we just have there's like an abundance of riches right now in terms of technical capabilities in the blockchain space. And the biggest challenge is just trying to, I don't know, stay on top of them all, figure out what to focus on. I'm curious about Solana too, and building Solana apps on top of Solana as well. I've known Anatoly for a very long time, and he always sends me really cool shit that is coming on Solana. So I'm very excited.
Yeah, we had Anatoly on an earlier edition of the Miko Bits show, and Solana is definitely one to watch. They've really prolifically raised quite a lot of money, and I think that they have a very seminal partnership with FTX. So I think it's a really interesting one to watch with respect to kind of performance capabilities. I think what I would love to do is use this juncture, because obviously you've sort of demonstrated through your words that you're, sort of really kind of a cornerstone when it comes to this Cosmos IBC ecosystem. But I think for the audience's sake, it would be great if you could kind of talk a little bit about your journey, because you've definitely been sort of a OG in this, and I'd love to kind of have people understand, how did this winding path lead, because I think it's been really incredible to see over the
Yeah,
years.
I can do the quick version of the story, right? Which is,
Great.
um, you know, 2013, I started getting interested in security, privacy, cryptography, distributed systems. Um, and that brought me to people who were working on things like the Signal protocol. I brought me close to contact with people who were working on Bitcoin. I didn't understand very much at all. I started going to Tarek's meetup, who is one of my co-founders at Sommelier now. He took over Andreas Antopoulos's SF Bitcoin Devs meetup. We used to get together, and I used to joke that, like, my joke about that meetup was that basically what happened is in 2013, all of the people who were like kind of in the San Francisco community who really understood what was going on and like how Bitcoin worked, they all got their startups funded. Like BitGo got funded, Blockstream got funded, and so everybody stopped going to meetups and started working on their startup. And so there were a whole bunch of people who started showing up at meetups, and none of us knew how anything worked. And so we'd all just sit there on Saturdays and Sundays, trying to teach each other and like figure out together how Bitcoin and ECDSA and signatures and zero knowledge proofs and all these things worked. It was all crazy and confusing, and that was what the early days were. And so at the time, I was just sort of like, I was, my journey into working full time in the space was, I used to work in scientific instrumentation, medical instrumentation, biotech kind of things, and sort of started to ease into it. I started like a more enterprise focused blockchain startup sort of in the crypto winter in 2014. But I always was a contributor to the public open source stuff. Contributed to Ethereum, contributed to Zcash, contributed to Bitcoin, was just like involved in all of that ecosystem. But in 2015, there started to be this sort of group of people, Vlad, Vitalik, Jay, Ethan, Dominic Williams, Jay Kwan, who all were interested in this what seemed like a very crazy idea, which is, what if people really, really started actually using blockchains? Like, what if instead of having, a few thousand people who wanted to transact on a blockchain on every day, what if it was millions or tens of millions or hundreds of millions of people? How would blockchains have to work? What would blockchains be like? How would you build a blockchain that could support this kind of use? And this kind of got into all of the designs of the various kinds of multi-chains. Cosmos, sharded blockchains, Polkadot, all of this sort of, Ethereum 2.0, all of this sort of came out of the conversations of those times, which I was a very active part of. But it was all like tragically underfunded. Like there was no money, like no money at all. So it was just like, it was the kind of thing you worked on in like nights and weekends. And many of us had day jobs, trying to make enterprise blockchains work. But I learned a lot about how financial back offices and stuff like that worked. And it started to become clear to me how public blockchains were going to win and why their winning victory was inevitable. It wasn't clear how long it was going to take, but like the scale of the victory was clear to me. And we didn't have the word DeFi, but it became pretty clear like what a shared system of record that could do arbitrary computation among millions of people would look like. It would look a lot like what we're starting to see experimented with DeFi. So all of these things became clear in 2017. In 2017, suddenly all these things that had no money suddenly had more money than they could deal with. And so then I spent, a lot of 2017 running around trying to help my friends who suddenly had like hundreds of millions of dollars that they needed to manage, deal with all of the problems that caused. And then in 2018, I decided I wanted to really focus on the Cosmos launch, because the Cosmos launch was like launching Tendermint, launching Cosmos. And I really thought that I could demonstrate that proof of stake could be far more decentralized than many people had sort of thought before. That it really could be a network of strangers, and it wasn't really just like decentralization theater, that like, you could really have an open system where anyone could run a validator. And so, that led to the Cosmos testnet program, Game of Zones, Game of Stakes, all of that stuff. Then 2019 happened, we launched Cosmos, and, really spent a lot of that time just running around the world, speaking at every blockchain week on the face of the earth, about Cosmos and building up adoption in the Cosmos SDK, which I think we see with, numerous high value Cosmos SDK blockchains today. Then IBC was ready to launch, but we realized that we needed to also do this big refactor of the Cosmos SDK at the same time. So that turned into the whole Stargate project. Stargate launched, and the Cosmos white paper was finished in March of 2021. In January, I started really working on Sommelier, because we were just putting, basically the reality of blockchain life, which many people haven't realized, is if you can't launch something by like Thanksgiving, you're not going to launch it again until March. Like the window closes because you hit Thanksgiving, then Christmas. Like I ran Game of Stakes during Christmas, and everyone hated me, and I'm never doing that again. And then I got, and so they like basically for when you're trying to launch some blockchain thing, pretty much, and then Chinese New Year's happens, and so between all of those, you're just like can't really do anything from like the end of November until the beginning of March. So started focusing on Sommelier. We launched the first version of Sommelier in March of the app for Uniswap V2 liquidity providers in March of 2021. Then in April, the Uniswap V3 announcement happened, and we decided to focus. We pivoted to our entire focus on Uniswap V3. We started contributing also with the Uniswap team. Part of our team wrote the Uniswap V3 subgraph, like the initial implementation of the subgraph, and upstreamed it into the Uniswap repositories. And so then we launched the pairings app. And now I'm so close to having the Gravity Bridge like really polished and ready to go. I think we'll be able to ship Gravity relatively soon. I'm thinking like sometime towards the end of June or early July. And we will have a Sommelier chain live very shortly. And that is my journey. And I'm a contributor to the Agoric project. I'm on the Zcash the electric coin company's scientific advisory panel. These are all the things that I do.
Yeah, that is tremendous. And just for my audience disclosure perspective, my fund is invested in Agoric. So just to be, clarified, and obviously, Zuko is a Agoric investor who is sort of also common.
I'm also an Agoric investor, so.
Okay, just want to make sure people understand where we stand, But I think, to me, the thing that I think is really sort of pressing with respect to the way people see Cosmos, at least in my audience, is kind of what's your perspective on Atom, right? Because obviously it's Atom is very, very, very different from something like Dot, So I guess I just want to get your lens on how people should be understanding it.
So I think that so I think a bunch of various, very exciting things. I think right now is a particularly exciting time for Atom, but it's actually a little bit. It seems like it's a little bit running under the radar, and the things that I think are running under the radar is two very important things are about to happen. So IBC launched, back in March, but as everybody would point out, like there's hardly anything happening over IBC, and because the answer is, while there are many valuable Cosmos chains, they're like, why do I need to IBC anything? What is IBC really doing for me? And what we are about to see, so starting next week, approximately, the Osmosis DEX, which is Sunny and Dave and the Kepler. I mean, this like a team of very OG Cosmos people who are frankly smarter than I am, are launching their DEX. And their DEX is it's very interesting. You can sort of imagine it as almost Balancer built on top of the Cosmos SDK. Because it allows for very programmable liquidity environments to be deployed. And they sort of treat it as like their model is they're building a DEX laboratory. One of the other things that they're really excited to explore on that project is MEV mitigation, using as part of the consensus. So like that is happening. And then about 2 weeks after that, I expect the Gravity DEX, which will be the Cosmos Hub Gravity DEX, to launch. And these are two sort of core Atom-centric projects. The Osmosis DEX is going to have liquidity farms for atoms, and Gravity is going to be running on the Cosmos Hub. And there's no other token other than there's no Gravity DEX token. There's just the Atom. And the general approach of Cosmos has never been, it has never made any sense to me why anyone would pay a group of token holders for interoperability. That's never really made any sense to me. And so if you're not, and that is largely the DOT model, which is, why would you run your substrate chain as a parachain? Well, because you can interoperate with the other parachains.
You do get conferred security from the hardware.
Okay. I mean, like I'm a skeptic. I'm a skeptic of shared security. I'm a skeptic of the security model. Every chain that is out there right now is run by the same like 500-600 validators, and they all have the same. Their reputations are inherently cross-chain. Just because, like, I think if you see a Cosmos chain and it has Occlusion, Chorus One, Figment, a bunch of other, Sika as its validator set, it doesn't matter whether or not there's $100,000 securing the value of that chain or $100 million securing the value of that chain. I don't think that I think that a lot users could have confidence in the operational capacity of those validator operators to provide a secure environment for them to transact. And so I'm like largely skeptical of economic security arguments here.
Nice.
I don't entirely think that's the way that works. And economic security is a piece of the puzzle. Incentive alignment is a piece of the puzzle. You can't walk completely away from it, but it is not the be all and end all of security. The point of Cosmos, but then you go back to what is the value of the Atom? And the reality is that I would say of no other Cosmos chain really has the liquidity that atoms have today. They're not traded on as many exchanges. And so what Gravity DEX and Osmosis really open up is it means that if you have an IBC, an asset that is built on the Cosmos SDK and soon on on other things, you will be able to, you can open up an IBC channel and immediately access this liquidity from the Gravity DEX, from Osmosis, from the Atom ecosystem. And suddenly now, the normal life cycle of a Cosmos SDK chain has, for the last 2 years has been, come up with a chain, get a validator set, get it decentralized, do an IDO, get listed on a bunch of exchanges, get some liquidity, build your software, maybe build a bridge to Ethereum, and keep going. The Gravity DEX and Osmosis are going to radically change this whole world, where there's going to be an incredible incentive to connect to Atom just to access the liquidity that is available. And I think people are, I'm unbonding 100,000 atoms to be a liquidity provider on these DEXs that are coming. And I'm kind of shocked that no one else is. I put up a governance proposal to make sure that the inflation rate is responsible enough, because honestly, I would expect, I think everyone else is suddenly going to realize you get, 9-10% a year APY as an Atom staker. And suddenly when you are able to provide liquidity into Akash and Iris and Luna, and all the assets that exist on, all the synthetic assets that exist on Terra, between Atoms and those in a fast, low cost, very innovative DEX design. We have 2. Suddenly there's going to be phenomenal opportunities to be able to in DeFi connected to Atoms. And I think that's really the future. I sort of laid this future out in July of 2020 in this memo I wrote called Atom 2021, which sort of laid out how we're gonna, what role Atom should play in the emerging Cosmos ecosystem after IBC is live, and we're realizing that role.
It's tremendous, and I think, to me, we're definitely rounding up towards the top of the hour. Otherwise, I would really want to scratch and double click on Osmosis, and I would actually want to kind of get a little bit deeper into MEV.
Yeah, we could.
That's a whole nother show.
These are the other things that I'm passionate about, really. I'm passionate. I've been, MEV is something that, again, if you go back to the group of people who were talking about scalable and useful public blockchains all the way back in 2015, 2016, we were all thinking about MEV back then. We were all expecting it. We're all when are we going to see it? What is it going to be real? And it's been amazing to suddenly see it become real. And it's amazing to see that this is driving demand for mitigation. And that is super exciting to me. And I think Cosmos has a lot, one of the visions of Cosmos has always been application specific consensus. So that you can connect very closely how the consensus algorithm works to what the application that you are doing. And there is no general solution to MEV everywhere. And so instead, you do need application-specific mechanisms to mitigate it. And I think Cosmos is really a laboratory for figuring out how those should be and what they should be.
Yeah, I'd love to kind of spawn a completely separate episode to kind of focus on the concerns around MEV. For the audience that's still catching up, MEV is miner extractable value, and it really has to do with the externalities of decentralization, where you actually have this sort of issues of things like transactional consistency and front running. So and of course there's lots more subtlety to it than that, but just to kind of unpack that a little bit to help people who are still scratching their heads, but I would say this has been obviously we're rounding up to the top of the hour. Do you have any other kind of futuristic things to say, maybe even far futuristic things. I think your statement about the inevitability and scale is obviously tantalizing. So I'd love to have you
Yeah, I mean,
shape that for us, and then
yeah,
we can
I
call it a
think that
day.
I think there is what we are seeing in we're seeing a couple of things. One is, I think, honestly, like during this drawdown, um, the first sort of markets, like this very volatile period that we're seeing, the performance of DeFi has been extraordinary. And I think the world is watching and the world is seeing how all these money robots perform. And the world is seeing, hey, like this does look like a better system. And I think as the system proves its worth over the next coming decades, the capital of the world will move to this system, whether the gatekeepers want it or not. Because like capital will just, like, these systems are so much better than legacy financial systems, that that like capital will find a way. It's like water in that way. You give it a more, like, if a more efficient system exists, capital will find a way to use it. It will find its way to it. And so I think that is pretty much the thing that I've been most excited about. And as these things get built out, I mean, the other big thing that I think is, how to build blockchains was very much a research question from, I'd say, 2015 to 2020. I think we largely now know how to build them. We kind of have explored the design trade-offs. We found that there are multiple valid places in the design space, but now it's just engineering to make all of those things like really good and mature and widely adoptable. And so, yeah, there's an inevitability to blockchain that that like really clicked for me in 2017, and has really never strayed from my mind since then.
Yeah, I love it because for me, it's an extension of open source software, which is effectively immortal software, right? And the thing that's, beautiful about this sort of conferred limited immortality is it's now been kind of conferred into things like runtime, and it's sort of self-propagating, so it's astonishing. And I think your point that I think, I love the most is that when you test a store of value, the test of it in production is to put the value in and to take the value out. But the thing that's so interesting is that by doing so, there's also a knock-on effect of stress testing DeFi, right? So,
Yeah.
so it's a beautiful thing because, having done that, the confidence that we will get on the upswing, it will be, I think it'll be impressive to see. So, it's a lovely point.
I have learned to love the volatility. Um, and I think that's a very important. I don't know. I sometimes I don't understand like the anxiety. Like I understand that pretty much everyone else in crypto Twitter is like margin trading way more than I am, but uh, but like I sometimes just don't understand the anxiety about like every time the price goes down, it goes up, like whatever. It's like, this is the natural evolution of disruptive innovation into the world, that it's going to be highly volatile for quite some time.
Yeah, and my model of this is that it's a man standing in a high place testing his weight on a beam that's of an unknown material, right? So in that mental model, the man will actually shift the weight and take the weight off, and then after the next time he'll actually shift more weight and then take that weight off, until such point in time where the man actually feels confident enough to move all of their weight and actually literally jump up and down on the new beam. So like, so I think that's where
That is
we're
absolutely the right way to think.
that's where we're headed. So like the idea that they're taking the weight off the beam is really just testing in production of store of value. Like and stress testing DeFi as a knock on. So it's beautiful. I think I love the word inevitability. It's absolutely what open source has always done, which is it's inevitability and it's also limited immortality, right? So it's a
Yeah.
really beautiful thing to observe, and it creates an incredible sense of calm amidst this wild volatility, it just gives you this certainty and this sort of beautiful sense of equanimity. So, this has been an incredible treat. Really hope to have you back, and this has been, just a heck of a lot of fun. So really appreciate
Thank you
both
for
your,
having me on.
yeah, tremendous contributions. And of course, just having a really fun show too. Thank you.
Thanks.
Okay.